Coming to the concept of goods sold. Now students, it implies the value of goods that have been used during this particular year. That means adjusting the values of opening and closing stock in the amount of goods purchased during this year. Remember, opening stock is by journal entry transferred to trading account. But what about closing stock? That is the stock left at the end of the year. Closing stock is also transferred to trading account through the means of this journal entry. That is closing stock account debited to trading account. Now students, since it is transferred to trading account and trading account is being credited in this entry, it appears on the credit side of trading account. But once it has been transferred, then the cost of goods sold can be calculated by using this formula, that is cost of goods sold is equal to opening stock plus purchases minus closing stock. Students, remember one thing, that in case these items are given separately, then opening stock is shown on the debit side, purchases is also shown on the debit side of trading account, whereas the closing stock is shown on the credit side. But if cost of goods sold is directly given to you in the question, that is opening stock, purchases and closing stock, then would not appear separately. There is no need to show opening stock, purchases and closing stock separately if cost of goods sold is given to you. In case this figure is given, then it is shown on the debit side of trading account.